Hey folks, this is Low Risk Trader today, and I just want to go over some things. It's one pattern I'm going to show today that is one of my favorite patterns, and I call it the 1-2-3 reversal, as many others do. Some people call it a W, where you're buying the W, and I'll show you like you take this would be the top, and then you come down, you have that little W part, and it comes down, and this low doesn't break the low, and you buy it above this high, and that's basically a reversal. So the whole thinking on my part of why this is such a good pattern is if it works, that means you bought the low range of the day. So this is the ES E-mini right here, and this is the NQ, which is the NASDAQ E-mini. Now I trade the NASDAQ side, but I watch the correlation between the two, and when they're both trading together, and usually this one's leading, the ES, I like to let it lead, and then I jump in with my uh, NQ, the NASDAQ. So let me go and start right here. This is the 1-2-3 on the NASDAQ, and you got the long, and that's the hammer, I believe is what the candlestick people call that one right there. Where if you bought it right above that top of that hammer, then you have to put your stop below that low, and that's a long risk right there. And now I think some people wait till the next candle after the hammer and then jump above it. So that I may be wrong on that as far as how to play that. But the way I play the 1-2-3 is you'll see it exactly right here. Um, I take that low, it made that little high, came down and could not continue on down. So now there's a lot of trading going on in this area, back and forth, until they realize if there's going to get a change in direction. So what they did the same thing here on the ES, which you had the 1, 2, and 3. It broke above the high, came back down a little bit down into here, but then eventually started on up. But now my breakout candle would be this one right over here where it broke that high. See right there? See, that did not break the high on this one. But when it broke that high, it never looked back. And I use a 5-point stop, which is 20 ticks. Okay, so um, I found that usually if it goes back against you 20 ticks, it could go on back down and keep going, or it may let you get in again, and then I still keep a 20 tick stop though. That's just you gotta preserve your capital. These are educated trades here. Well, I shouldn't say educated, but it's intelligent trading. You're doing the risks that are calculated, and you know that for the most part they work most of the time. So let me show you how I did take this trade the other day on the 16th of August, and I took out because I had already had a loss earlier that day from up in here, trading a different style pattern. I was down 99 bucks, and then I made back. I think I walked away. I was over 600 bucks for the day on one contract. So, and it kept going. If you just hung in the rest of the day, it went up. You could have gotten quite a few dollars there. But what I want to show you though is a it's a stronger. Um, I don't know what you want to call it. Hold on just a second. Okay, I guess I was trying to say is a stronger signal is when the all three of these lines are crossing. So this red line here and red line here, 50% levels. On the slow stochastic on this one, the RSI or relative strength index on this one, and then the MACD, of course, you've got the crossover back here, which would have been the original signal uh, at the 1-2-3 crossover. So this one, when all three of these, and this lagging one is the slow stochastic, all it's showing is it's going into an uptrend when all of these three cross the are across the red line, the 50% line. So, or not this one, but these two. Um, and that one would have been when it broke out. You would have broken out on this candle right here. It looks like it was 12:50 time frame, 12:50 p.m. in the afternoon Eastern Standard Time. That is right around the time it crossed over and right at the time it broke out. And it's still, I'll go back over here at 12:50 is this candle right here. It broke this high, came back just a couple points, didn't hit you on your 5-point stop, and then continued on for the day. Now that is a safer trade to do because you know at that time that all the things are lined up to go long, and those, I mean, when the Nasdaq is going long and when the E-mini is going long, those are a lot of stocks involved. So, and that is an index of those stocks. So that is a good signal that it's that the rest of the market, that probably the YM is going up with it, the Dow, which is only 30 stocks. But this is my first go-to is the 123. Like I said, and all you do is a 5-point stop loss because if it doesn't keep going, it's probably not going to. And I've had those fail on me too. So just wanted to throw this out to you, something to think about. Now that you know about that pattern, if you haven't seen it before, now you'll be seeing them everywhere. But it does work in the opposite direction too. I just don't like trading it on the Nasdaq right now because overall it's a bull market. So you got that 1, 2, 3. You sold it below that low and it went down. Now I see all that heat. It came back because a lot of people will put their stop up here below that anchor, or not the anchor leg, but that pullback leg. And I don't. I've lost too much money. I've made money on the long side and then just give it right back on the short side. And that's not to say that it doesn't work, but look at it. So yeah, it kept on going down some, but it's choppy as can be, and you are risking a lot of capital there to be right. So in this environment now, because I say that because it is, let's go to the daily. Uh, it is a long. I mean, look at this right here. Overall, that's been going up. Now you had these little pullbacks here, of course, but we haven't had it where the talking heads on TV have all been saying we're in a bear market. Okay, so until that happens, I would still be looking, and I am still looking for long positions. So that was my little tidbit for the day, or whatever you want to call it, a little training piece. I've been doing this since about 1990. So back when we were drawing charts by hand, and you had to figure out, and you're doing daily charts, and you had to figure out your moving averages with a calculator, and so a little different now, and that that could be a good thing, and that could be a bad thing. We're still losing money every day, that happens. That's just part of the game, and you take your losses and you take your wins, and that's hopefully you have a lot less. You lose a lot less than you win. That's the game. So I appreciate you watching the video, and I hope you have good trading. And please subscribe to my channel and hit the bell. And every time a new video comes out, then you'll be alerted to it, and you can watch what I did for that day. So I hope that's a good teaching point here. And also, please like the video too. That helps me out on my channel. Okay, thank you, and have a good day.